I'm Kurt Shimmers. Every day, fortunes are gained and lost in the financial markets. News, trends, and even geopolitical events shape your financial landscape. Join me and my expert guests right now on Traders Nation. Welcome. You are tuned in to Traders Nation. Thanks for making us a part of your day. Don and I have got a jam-packed show. Anthony Saccaro, he's going to be back with us. He's president of Providence Financial. We're going to be talking about consumer confidence today with him. Consumer confidence hit a rebound of a high of 18 years in April. So we're going to talk to him, and we're going to see what does that mean for America. Plus, payment processors, data centers, towers, gambling, all remain focused on Don and I's list. These charts are setting up absolutely fantastic, so you're not going to want to miss that. So we got stocks, guests, news, and a whole lot more. Stay tuned right here. We'll be right back.
Traders Nation. Get Pro Online DVD Trader today. Whether you're an experienced trader or just beginning, you'll improve your skills dramatically. Click on the Knowledge Center button to order your copy today. Traders Nation, delivering what you want when you want it. Traders Nation.
Hi, this is Willie Nelson. You're tuned in to Traders Nation.
Hey, welcome back. You are tuned in to Traders Nation. Thanks, Willie. Hey, Pro Online Trader, get a copy of it today. It's a DVD. It teaches you how to trade stocks. So when you're hearing about us talking about stocks today, about resistance, support, moving averages, and you don't know what we're talking about, if that's like strange language to you, foreign language, if you will, get a copy of Pro Online Trader DVD at tradersnation.com today. Click on that More button for $29.95 plus shipping and handling. You can get yourself a copy. And we rush this out to him, Don. We rushed it out to him. Okay?
That's right.
Get a copy today. Hey, Dono, so listen, we got payment processors on our list. What else is on our list here today? Gaming's on our list. Data towers.
Yeah, the sectors we follow are doing real well, even in spite. Today's a down market, but if you take a look at the payment processors, Square, SQ, one we've been talking about, 52-week high on the stock.
Yeah, it's hitting it right now, folks. Okay, so we've been covering Square SQ for quite a while. In fact, they're one of many on our processor list. And doing nicely, Don. I mean, these stocks have been doing these stair-step climbs up. Square is is in that ballpark, Don.
Well, growing business, Square, M-A-V, V is in Victor for Visa. And then, of course, that new one we introduced several weeks ago, PAGS, P-A-G-S. Yeah. That's a Brazilian company.
Yeah. Right. So there you have it. So those should be on your list. Let's talk about Western Union here today, Don. So we got Western Union. Ticker symbol is WU on this one, folks. Bring it up on your charts. Check it out here today. Western Union currently trading at $19.86, 680,000 shares exchanging hands here today. Average volume on this one's 5.1 million shares. Beautiful chart on this. Take a look. All right, so the stock took a dip since we last spoke about it, okay? Bounced off its 200-day moving average. Found resistance is going to be at $20.50, as we mentioned last time. But that's what's going on with this particular stock. Don, WU, your thoughts?
Well, it's a $20 stock. Western Union is kind of the founder of the business, the money transfer business.
Yeah.
They do a lot more. Obviously, there's a lot of competition, but it's a great sector because this is a growing sector, and these companies are simply not going away, Western Union being one of the leaders in the business. But I really like this Brazilian company, PAGS, P-A-G-S. New to come public.
Yeah.
A little bit of a lower price, $34.05.
Yeah.
We got to keep our eye on that one. Of course, we've got Square and PayPal.
Sure.
And these are the sectors to be in. This is one of the sectors, no doubt.
Without a doubt about that. Western Union, W, Visa, V, MasterCard, MA, Square, SQ, PayPal, PYPL, and then also the one that Don's really shining up to here today, PAGS, PAGS, Papa Alpha Golf Sam is the phonics for that one. Hey, Don, let's move on to gaming and leisure. Certainly, GLPI is in that particular spot, currently trading at $35.27, 112,000 shares exchanging hands here today. Bring the chart up on this one, folks, okay? Stock is making its way up nicely, nice and easy to that 200-day moving average at $35.66, a little footnote here. Dividend play also, 63 cents per share. It's going to be coming out on this. X day is 614. 614. Don, your thoughts?
Well, GLPI, interestingly enough now, this is a trend that we see.
Yeah.
This company is a company that buys the real estate properties and then leases them back.
Yeah.
In this case, they hold the properties that Tropicana is running. So GLPI is the symbol on that one.
Yeah.
And, of course, as we were talking pre-show, MGM has a big acquisition I want to talk about in this sector. MGM Resorts has acquired a private company out here, which includes, by the way, Yonkers Raceway, which has been around for about 60 years.
Yeah.
They acquired a company called Empire City, which is a private business, $850 million transaction. And then the stock hasn't done a lot, MGM. But then, interestingly enough, MGM is doing the same thing. They have a subsidiary company called MGM Growth Properties, MGP. MGP, the symbol on that one, trading at around $20. MGP goes in, buys the real estate, leases it back to MGM.
Sure.
And that's and obviously they found a way now to monetize their real estate.
Well, that's a clean deal because that keeps those entities separate and the money in the family. Okay, Don? Right?
That's right.
Yeah, I'm liking that. Carlos Slim, you and I talked about Carlos Slim forever, okay? Carlos Slim doesn't spend money unless it touches a company he already owns, right? Right.
That's right.
He keeps, he has all these different entities, keeps some money in the family. Nothing wrong with that. MGM is the ticker symbol on that one, $31.83 where it's currently trading at, folks, right now. It's about 2 million shares exchanging hands here today. Moving average on that bad boy, $33.34. Okay. We saw a nice reversal on MGM. Bring it up on your charts at $31. We're up a couple days in the trading session here today on MGM. Don?
Now, on MGM, as with a bunch of others, these stocks are all up for the year, but I want to point out that we talk about some companies, you got to write the symbols down and track these stocks, but as an example, Penn National Gaming is a stock we brought to the listeners and viewers months ago.
Yeah.
Trading here down a dime here today. This stock is at $34.22. That represents an 18% gain this year.
Yeah.
And so, and there's a couple others I want to mention. Boyd Gaming, Melco Resorts, and Penn Gaming in this sector up respectively 16%, 19%,
sure.
And Penn, as I mentioned, up almost 19% for the year.
Important for our listeners and viewers to know that we brought Penn and all these other ones. We haven't talked about Penn in a little while, but up 18% since the beginning of the year is absolutely fantastic. First brought it to our viewers' attention back in the fourth quarter of last year when we started our stock list for gaming. All right, Penn's nice to talk about here today. Let's move on to data. Daters and towers. Okay, Don. Core Site Realty Company currently trading at $107.38. Respectful 60,000 shares exchanging hands are a little bit light, but the chart doesn't even look like it's a thinly traded stock, that's for sure. Bring it up on your charts. 200-day moving average on this one, on Core, is at $108.60. Nice move, up $3, Don, since we spoke about Core last. Remember on the last show, in the last edition of Traders Nation, COR was on our list. It remains there, up $3 since then, Don.
Now, in this sector, the data center business, I guess it was yesterday or the day before, I mentioned last show hyperscale data centers, and there's about 50 companies worldwide, and just the other day, I believe it was on Tuesday, Amazon announced that a major data center is being built in Utah for them. Yeah. And so that data center will be controlled by one of these real estate REITs, no doubt.
Yeah.
Because there are just a few of these companies, Core being one, that control many of these hyper data centers, hyperscale data centers around the world. Core being one, COR the symbol, down a little bit today, but these are companies we want to keep our eyes on.
Sure, absolutely. Once again, a beautiful chart. If you look at this chart, you would not think that it's thinly traded, but it is. So keep an eye on it. Nice move on Core, COR. All right, Don, let's move on to Towers Unity Group. Trading at $20.76, 234,000 shares exchanging hands here today. You know, we talk a lot about real estate and real estate plays and all this, and certainly these towers are also a real estate play in REITs. Don, your thoughts?
Each one of these tower companies, AMT, CCI, Crown Castle, SBAC, another big gun in the business. These are all real estate investment trusts, and once again, they're keeping the money in-house. They own the properties, they put the towers up, they in turn lease the space to all the major telecom companies around the world.
Yeah.
SBAC unit we introduced at around $16, trading in here almost $21.
Bring it up on your charts. Hopefully your pencil's been sharpened. You've been writing these down. And if not, you can catch the rebroadcast of Traders Nation. Coming up next, Anthony Saccaro. He's going to be with us. Consumer confidence in April rebounds close to an 18-year high. That's phenomenal. Stay tuned. We'll be right back.
Hi, I'm Steve Forbes. You're watching Traders Nation.
Welcome back. You are tuned in to Traders Nation. My pleasure to have back with us once again Anthony Saccaro, President of Providence Financial. Anthony, welcome back to Traders Nation. How are you today?
I'm doing phenomenal. Thanks, Kurt.
Sure. Hey, listen, consumer confidence in April, all right, rebounds close to an 18-year high, Anthony. What does this mean for America?
You know, the 18-year high is great. I mean, it sounds good, but in some ways, I almost feel like we might be back at 2007 all over again. You have to remember, back then, everything was great as well. Stock market was at peak highs.
Sure.
Real estate was at record highs. And then we bottomed out in 2009. We were down. The market was down over 60%, and now we're up almost 400% in the last decade.
Yeah.
And we know that no good party lasts forever. So I'm actually concerned.
Are you? Okay, so back then, certainly it was housing, a default of loans, things of that nature kind of hit that. Some people don't realize this, but it's actually the price per barrel of oil that actually kind of kicked that off, and then the housing crisis hit, and then everything fell apart. What would you think would be the catalyst this time around with all the euphoria?
Well, I think there's a couple of potential catalysts out there.
Yeah.
I think the biggest catalyst is probably the fact that we've gone into more debt as a country in the last decade than we had in the entire previous history of this country. I mean, we're kissing like $21 trillion in debt. And, you know, the Federal Reserve is supposed to be able to raise interest rates when the economy is overheated. That's kind of like putting the brakes on the economy.
Yeah.
And yet they haven't been able to do that. So interest rates have not rebounded. And I think where the rubber meets the road is with interest rates. I think that's more telling than almost anything out there. But the debt could be that catalyst.
All right, so interest rates hitting the road is going to be the tall tale of the tape from what I'm hearing. Well, you know, let's go back to confidence in real quick, because then we can lead up to potentially what's going on. So confidence is coming in several areas, and people feel that prosperity, better pay. Even if they're not getting it, they feel a sense that there's going to be a better pay for them. Jobs, certainly, job numbers are great, 3.9%. So the confidence is kind of fueling all the euphoria. Would you agree with that?
Well, it absolutely is, and it's one of those things that when you're sitting in a bar next to someone who tells you what stock you should be buying next,
right?
You and I both know that that's the time to start getting out of the stock market, when you start getting tips from grandma and other people that don't really know what's going on.
Yeah. And
that's the way it was back in 2007, and it's almost like 2017 fueled consumer sentiment. The stock market went up 25%. Now there's people that you feel like they're getting missed out on, or they missed out on that, and now they're getting back in. I think it's the worst thing they can do at this point.
So they're chasing it, right? They feel like they missed out, so now they're chasing, which is you never do that. You never chase a stock, let alone the market. Interesting. Okay, so Americans are feeling much better about their financial future, and certainly we're talking about that here today. Are we seeing any signs of, you know, people are spending money, but are we seeing any signs of people actually saving money or maybe even playing catch-up to the last 10 years?
You know, that's the one good thing that's happened over the last 10 years is 2008, that whole time period really woke people up and got people to realize that the market doesn't just go up forever. And yet I'm worried that people are starting to forget that. But really, debt has come down quite a bit. Savings has gone up quite a bit in the last decade, and that's a very positive sign in general.
Sure. All right, so people spent a lot of them. Well, listen, they had to bail themselves out, first of all. They lost a lot of their money, so it certainly makes sense to me that that sting of the market dropping, maybe a lot of people learn from that. But I'm hoping that they don't forget that, because that certainly is a big issue, and we certainly have short memory spans, don't we? All right.
You know what? That's exactly right. You know, and the fact is, the last 10 years the market's done well.
Yeah.
People have forgotten that in the last generation, 18 years, we had a 50% correction or crash in 01. We had a 60% correction or crash in 08.
Yeah.
And now we've just rebounded from that. The stock market over the last generation has produced less than 4% a year return if you buy and hold like they want you to.
Right, right. All right, so as a financial planner, let's talk about advice that you can give people here today looking to recover from the last 10 years. What would be a plan, Anthony, that you would lay out for folks, or have been laying out for folks, I should say, when they're trying to recover, whether they have a little bit of income to help them do that or a lot? What's your plans that you're laying out?
Yeah, so I think there's really two categories of people. First are the younger people that I think should be in the stock market. And the plan we're laying out for them is to hold off of the stock market for now, tread water, put your money in a safe place that's going to earn 4 or 5%, wait for a better buying opportunity, which is almost certain to come. And then for our older people, a lot of our clients can live off of 4 or 5% a year interest. Why gamble at all? Why put your nest egg at risk at all? Take your 4 or 5%, live off that, never have to worry about selling shares to get your income, and don't go back to the Wall Street casino. You don't need to do it.
That's right, the Wall Street casino. Fixed income, good for older folks. So let's say that I'm 25, 30 years old, maybe even 40 or 50, let's say, right? So I'm working, and certainly companies have their 401ks and bonuses. Would taking those bonuses to me is like lost or found money, right? It's not part of your monthly bills. It's not part of your monthly income where you're going to have to pay out bills. What about taking found money like that and putting it away? Would that be one good way to start saving or to continue your saving on top of everything else you're doing?
Oh, absolutely. If you've got a retirement plan and you're fortunate enough to have one of those plans that still matches, you got to put in there at least what you need to put in order to get the free match. Outside of that, if you have debt, I think the best thing to do at this point is take some of those savings. Once you've built an emergency fund, take some of those savings and pay off your debt, because paying off debt is saving. And a lot of people don't get that. So you want to build the emergency fund, pay off your debt, and then start saving outside of that.
Yeah, because that's a great point that you're making. You know, being debt-free gives you better staying power as an individual, or even as a business for that matter. And also, being debt-free or working your way there is financial independence. So you don't have to have a lot of money in the bank, which certainly that's the ultimate goal. But at least at this point in someone's life, if you're debt-free or almost debt-free, isn't that financial freedom in itself, Anthony?
Oh, absolutely. That's huge, being debt-free or being able to be debt-free, having strategic debt that you could pay off if you need to. That is financial freedom. And really, it's all about cash flow and having more income coming in than you have going out. And so the bottom line is you got to control your cash flow. And if you control your cash flow and you make sure that you've got more coming in than going out, then you'll be okay.
I think so. All right, so I'm going to pop over to something really quick before we run out of time. I want to talk about signs of inflation that they're popping up. Cost of raw goods, energy to produce, etc. Do you think that this type of inflation of growing costs to do business or buy goods, raw goods, things like that, you think that's going to shake up a little bit of the confidence that we're seeing in the market, or you think we're going to be able to chew through that? You think confidence will be able to chew through some of those costs?
Well, as inflation grows, then the Federal Reserve is supposed to raise interest rates. I mean, those two go hand in hand.
Yeah.
And the Federal Reserve can't raise interest rates because of the fact that we're $20 trillion in debt. And for every quarter point that they raise interest rates, the government is going to have to pay an extra $50 billion a year in interest. So there's very conflicting information. I think that inflation is going to stay low for a long time for one reason, because the baby boomers are older at this point.
Yeah.
And when you get older, you tend to spend less money. And if you spend less money, that there's a less of a demand for goods and services. And so the demand, I think we're in a lower inflation environment.
Okay.
And I think it's got potential to be here for a long time.
Okay, so all those raw goods, cost of raw goods and energy to produce those raw goods, those are going to be fluctuating within the cycles of a given year, right? Is basically what all that we're going to be looking at here.
Well, that's right. So, I mean, everything's going to fluctuate as well.
Yeah.
As the boomers get older, it's going to keep inflation down. And let's not forget about the fact that the dollar's been on the rise as well.
Yeah.
Certainly depends when you talk, but a strong dollar's bad for exports, right?
Yeah.
And that also is bad for the producers.
Okay.
And so that's going to hurt us with inflation as well, too.
Anthony.
So inflation numbers look good, but I don't think they tell the whole story.
Where can we find you at?
ProvidenceFinancialInc.com.
ProvidenceFinancialInc.com. Anthony Saccaro, thanks for being with us today.
Kurt, thank you for having me.
Have a great day. We'll be right back. Welcome back. You are tuned in to Traders Nation. You know, Don, it's really interesting. Anthony's a great guy, right? Very, very knowledgeable in the markets. I was actually going in a different direction here today, and so we're gonna be bringing Anthony back on as far as consumer confidence is concerned, and his thoughts about how we feel that the current market's setting up as it did back in 2007. I find that very, very interesting.
Yes.
So, Don, what else do you want to hit today?
Well, we can focus on what Tony is talking about, because some of these stocks are stretched, there's no doubt.
Yeah.
Some of them have had tremendous moves.
Yeah.
The unemployment is down. The tax cuts are in place now. The markets are kind of just humming along.
Yeah.
And in a way, he could be right.
Yeah.
That we're approaching some of these 07. I mean, look, we were there. We saw what happened.
We were.
Some of these stocks were trading at unbelievable levels. The money was pouring in.
Yeah.
And look, there's always different times to get into the market.
Yeah,
and,
totally. Yeah, totally.
Over the past few years, though, this buying on the dip, that's the place to have been.
We're out of time. It almost sounded Peter Schiff-ish. Remember when we had Peter Schiff on? Anyways, we're out of time here to Don. Don, do you own anything we talked about?
No.
All right, I don't either. We appreciate you tuning in today and certainly making us part of your day. We'll catch you on the next edition of Traders Nation. Everyone have a great day.